Welcome again to another training on process over outcome and how we go about trading. Now, what I would like to show you now is that there, what sort of move the market is interest rate decision. Now, the last interest rate was 1.5, and they've increased it. But guess what happened? People would expect, I'm not sure what the Fed said in terms of the person who was in charge of monetary policy in the US. I'm not sure what they said. However, even though interest rate should have a positive effect on an increase in interest rate should have a positive effect on the currency. However, for this time around, it was a negative effect. And a lot of the times it's already priced in. Now, what one has to do is always basically you know, look at the chart. And that's the reason why for me I've stopped trading using fundamental analysis, because a lot of the time it's already priced in. They already know this 2 months, 3 months. And a lot of times, the data that we get is forecast based on probably 1 to 2 years, or well, actually 1 to 3 years later. So, you know, I'd rather look at the chart and use what the chart is telling me to place my trades. Anyway, some of the trades that I've taken this week, and that's a client account there. Some of the trades I've taken this week, I was into this trade. This trade came to my target. I was looking to see if I could get back in there. Trade didn't trigger me, so I allow it to run. This trade I was in, took it all the way down to here. But look, this is the Australian US dollar. Came out positive for the US dollar, but yet still the Australian dollar went up. Okay. That one, really nice, good trade. This one, I put an entry there below there. This trade didn't trigger. What happens? Negative there for the currency. Okay, nothing. I didn't get the trade I was looking for there. I was looking for the trade there, didn't get the signal there. Right, I'm looking for this now. Come back down to this zone before I'm looking to probably take a trade on this one. This one here got my trigger, went up, but sometimes this is a risk you've got to take. I'm down 38 pounds on this one. I'm risking, let me see, risking 96 pounds there, 121 pips. But anyway, let's see what happens. The market then come below here, then I know my prediction was wrong. And this is based on my strategy. So, I didn't just go and place this trade out of nowhere. I could always say, what, let's cut my losses. But sometimes what you've got to do, you've got to say, okay, right, I've already was willing to take the risk on this trade, or what I could do is, okay, to say, let's cut my losses and see, what happens next before then jumping back into the trade. Here, I was looking to take this trade here, didn't come far enough, and I didn't get that candle sort of trigger that I needed. However, I could have taken the trade there when I got this pin bar. But when I got this, I think I took this trade, but when I took this trade all the way down to here, when I got, and I was taking the pin bar for it to go back up because of these two, which one of my trading strategy. But then when I saw this, huge candle here, this red candle, signify the market might be going back down. That's the reason why I closed that trade. Here now, I took this trade based on my strategy, and I'm in the money for that one. I'm still waiting to see what this is going to do. Well, copper certainly giving me something to think about there. Natural gas, I took this trade all the way up to here. Now waiting for it to come back down to this zone before I'm back in again. I should have taken this one here because I did put it there to take it down, but I was in a number of other trades and I didn't want to open any new trades. But as you can see, my prediction based on my strategy work out. Okay. This one here, I was to take this one going down. Luckily, I didn't take this one. Well, I didn't get a candle signal to trigger me into this trade. And the S&P 500, basically that one here, looking for a sell there, but I'll wait and see. Should have taken my sell trade from there based on my strategy and based on my signal. Nasdaq, nothing there, and I didn't set up anything there. And for that one, I'm just waiting to see what happens. Okay, so those are the typical stuff, what I'm looking at the moment. Okay, now let's get into any questions before I start, because the homework was really good. Most people did the homework, so what I'm going to be doing now is go through for the next phase of what I'm going to be teaching you today. Basically, once I've taught you the strategies, then they become a bit easier for you to see and to spot. Now I'm showing you the trades that I'm in. So once you see them and you see that, actually they're working, and the fact that they're working, then hopefully, it will make more sense. Now, we're not at the point of trigger just yet, but at least you'll hear these jargons, and when it's time for you to start learning these things, then basically, you will be able to sort of understand it even better. Pin bar, that's another thing that you'll see as well. Okay, we'll go back into the trade when we get another signal or another setup. So it's all about, right, when we so it's all about what we can actually what we can see there and then. Now, the reason, as I said, one of my biggest challenge as a trader was always when I initially started, was the fact that I have never seen any real traders. And for me to see a real trader, the minimum any one-on-one course would offer me would have been £250 per hour, or I would have to go on some £19,000 course for me to see someone trade live, because none of them are willing to charge any less. All the big companies out there, So, I'm saying I want to be different. I want my students to see real trades with real trading. So, once you're seeing that, then that's going to give you the confidence that actually the strategy works. And not only that, actually trading can work. And then if you see trading is working, then even if you're on a losing streak, you'll think to yourself that, look, I will recover that money because I've seen Marlon done it. So I can do it as well. And he's teaching me exactly what he's doing. Yeah. And, I don't beat around the bush and hide anything. I'm showing exactly how I go about doing this thing. Right. Now, today's lesson, we spoke about supply and demand zones. Now, today, what we're going to look at how we go about selecting the markets that you're going to be trading, and why it's really important that we build a relationship with a limited number of markets, and also to understand the correlation. Okay. Now, I would like a volunteer today. And let me tell you guys, this is how I like doing this thing. I like when I say call on someone's name and they respond. So I would like to basically log on to someone's computer. Any volunteer?
Yes, I'll volunteer.
Okay,
Oh, so at the same
No,
time.
you go. Okay, it's all right.
okay, Petra. So yeah, so what we're gonna do, I'm gonna log on to your computer, and then what I'm gonna do is because we're gonna be looking at selecting particular currency pairs today and how we go about doing it. Okay, so you can always give me the details for TeamViewer because what one of the greatest thing is if I'm doing it here, then sometimes people don't really get it because I'm just clicking this and clicking that. But then if I get someone else to do it, then you can see what's happening as well. Okay.
Okay. Mm-hmm.
So can I get your login details? Yeah.
Okay, put it in the chat.
Okay. Thank you. And password. Right. Okay. Right. What I want you to do now for me, Patrick, I needed to go onto my FX book. So on the internet. So my FX book, and there's
.com.
first, yeah.com. And just enter. Then you're gonna go to chart, market, scroll, yeah, and then you're gonna scroll down to correlation. Okay. Okay. So with correlation, right? What does correlation means, right? Now, correlation is when we've got one variable and another one having a relationship between themselves. Okay. So if we have, say, let me give you an example. Say, what do you think, guys? Let me see, Ahmad, because you've just done your GCSE stats. Ahmad,
Yes.
what can you tell me about the relationship between the temperature outside and the number of ice creams sold?
Um, the higher the temperature, the more likely the number of ice cream sold. So
Okay.
there should be a positive correlation.
Okay. And what does that mean?
That means that um,
As
it
one
means that
as one go up?
the one goes up, the other one should go up as well.
Okay, brilliant. No. So this is what we've got now, guys. So if, for example, I've got Facebook, okay? If I've got Facebook and let me see, Facebook is in affiliation with, say, I think it's Twitter. So Facebook and Twitter, they are sort of, cousins, right? Now, if I saw a trade set up on Facebook and I saw a Facebook on set up on Twitter, right? Now, what's that gonna do for me is that um, Twitter and Facebook, because they're positively correlated, because they're similar people, then I'm actually, and my risk on any trade, say for example, I said on my account, I will only risk £100, okay? And that's all I'm going to risk. But I get this trade on Facebook for £100 and I put that £100. But then I've also seen another trade on Twitter, but I saw them at the same time. If I was to take those two trades, right, that I'll be risking roughly £200 because on one trade, because both of them are positively correlated. Okay, because as Facebook go up, Twitter will go up. Yeah, you're strongly correlated. Now, the reverse of it is, for example, if the temperature outside decreases, yeah, then we've got stuff. Let me give you another example. Something that's the price of your car. As the age of your car increases, okay, so let's show you this one now. Okay, so So this is the graph, right? Okay. Okay, so this is the age. This could be the age of your car, right? And this is the price. Okay. So what's going to happen is as the age of the car increases, so the price of the car is going to start say there, right? But as the age of the car, because the age of the car is going up that way, right? But what's happening is that the price is going down, unless it's some vintage car. But typical cars, that's what's going to happen. So it's going to have what we call a negative correlation. We've got a positive correlation if both of them are going up. Okay, negative correlation. One is going down, yeah, while the other one is increasing, going up. Okay, so if I go back to Petra's now, right now, so Petra, what we're gonna do now, we're gonna so Petra, if we could click back on the internet link, please. Okay, so what you're gonna do now for me, right? This is what you're gonna do for me. You're going to select a number of markets for me. The markets you're gonna select for me, you're gonna take and could you write this down for me because this is gonna be your homework for next week. Okay, you're gonna write down for me, and I want you to select two majors. And when I say majors, I'm talking about markets. So when I say the major currency pairs, yeah, which I'm going to show you what they are as well. Okay, so you're going to select two major currency pairs, two minor currency pairs, one commodity, one metal, and one indices. Okay, so we've got two major, okay, two minors. We're not going to take the exotics, yeah, because the spread on the exotics are very, very big, very wide. It costs us a lot of money. Okay, then we're going to take, what did I say, guys? What did I say? Can someone type in? I said two majors, two minors. What else did I say? Anybody?
One commodity.
Yeah, one commodity.
One commodity.
What I say?
One metal.
One metal.
And one indices.
And one indices. Okay. Now, we won't be trading any Bitcoin. Not for now because we don't have enough data on Bitcoin for us to be chancing trading Bitcoin. Petra, what you're gonna now do for me? You're gonna click on more, which is here. Click on more for me. Okay, and then you're gonna click on hide all. So we can, yeah. So click on hide all. No. We're gonna click on more again. Click on more. And then here where you see hide all, you're gonna click there for me. Okay, right. So what we're gonna do now, when I say two majors, for example, let me show you now. So what we're gonna do, we're just gonna uncheck the maximum I can put here is 10 different markets, right? So in effect, 2, 4, 5, 6, 7, we're gonna have 7 different markets that we're gonna try and build a relationship with, and we're gonna also do some research about these markets, okay? As part of your homework. Now, one of the major currency pair we've got here is we've got, let's find the major, we've got the Euro GBP, we've got the Euro USD, okay? GBP USD, okay? We've got the German 30, you know those stocks, the indices, let's call it indices, okay? We've got the New Zealand USD, which is another major. We've got the UK 100, which is, the indices, okay? We have also got, we've got silver, we've got gold euro. We have got silver USD, but we're not going to take that one for now. I'm going to go for gold, and I'm going to go for silver, okay? Okay. And the commodity, I think this one is, I think XTI. Okay. Okay, right. Let's see if I can find, and we've got the, and this one is the US 500, okay? We call this the S&P 500, the top stocks in America. It's called, this is an indices. We can choose a commodity and so on after, right? But for now, what we're going to do now, because we want to see the correlation of these symbols along with this lot. So the same ones we're going to select on this side. So I'm going for GBP USD. I'm going for gold. I'm going for Euro GBP. And I'm going for the German. And I'm going for the USD 5. Remember, that's an indices. Then I'm going for Euro USD. Then I'm going for crude. I'm going for silver. And I'm going for UK, and I'm also going for New Zealand USD. So then, Petra, I wanted to click on more for me. Okay, right. Now, we won't take any market that's above 70. Okay, now if you look at this one here, we have got gold and silver. There's a positive correlation between them, yeah? And let's see if we've got another one there. We've got New Zealand. It's very much correlated with these two. So these two, the correlation between them is very high. Let's look at GBP USD. Okay, the GBP USD and the Euro USD, they got a very high correlation. So what I'm going to say your homework is for the markets that you're going to choose, right? I would recommend that you have a maximum. And remember, these things do change. But because I've got it on the daily, yeah, let's see what would happen if I put it on the weekly. Let's see how much these will change. Okay, now it's even more, a higher positive correlation. So this is what we call, for 87.9%, that's a very high correlation. So therefore, if I buy GBP and buy Euro USD, I'm actually taking the same trade in effect, because as one go up, the other is going to go up. So if I buy these two at the same time, I'm doubling my risk. I remember back in the days when I first started trading, I would see a setup on the GBP USD and I would see a setup on the Euro USD, and I would take both trades, not realizing that, they're actually the same. Now, however, how to get around this? Say, for example, you wanted to take these two trades and you plan to risk, say, £100 on your normal trades. Then what you could do is, because they're so correlated, right, positively correlated, as both of them go in the same direction, then what we could then do is this. We could put £50 risk on one. So therefore, if it goes in the opposite direction to which we think we want it to go, and £50 on the other. So we're literally taking the same trade. They're not 100% correlated. So, we might, so we're taking the same trade, but we're splitting the risk between both of them. Okay, because if you see the right setup. So what we definitely don't want then is for anyone to be trading the Euro USD and the GBP USD at the same time, and you probably wouldn't want to have both of them. However, I would say we have a maximum, out of those 7 pairs, we have a maximum of anything over 70%. So we're allowed to over 70%. Okay, look at this one here. I think this one is crude oil, 90% with the S&P. I'm not sure. I think this is crude oil, but it's 90%. That's almost like they go like for like, blow for blow there, So I would say you've got to be very selective, with how you go about. Now, so that's for the positive correlation. Now, When you see negative, you see these negative values that you can see there. And guys, remember, don't worry about these terminologies that I'm using about positive correlation. Positive correlation just means that as one is going up, the other is going up. For example, GBP USD and the Euro USD, they've got a correlation of 87, right? So therefore, as one is going up, the other is going up. Actually, in fact, let me just show you some. You're gonna go to your market, your MT4 platform. So go to your MT4, yeah, that's it. And what I need to see, I need to see the markets. Okay, so go into your view, so I can see the market watch. Okay, so click on market watch. And what I would like to see there, let me just go into file, and then let me just go into file. Just give me 1 minute. Okay, so what I'm gonna do, just 1 minute, Petra. Let me just get something here. And I'm going to go into file, and I want to go on to a different, because I don't want to sort of delete any of the stuff that you've got there. Yeah. So what I've done, Petra, I've actually gone in and I've gone on to the default. So if you want to get back the one that you're on, it's one of these here. Okay. So I've gone back just to default, right? Now, Petra, what I wanted to do, I wanted to find for me GBP CAD. I wanted to find for me GBP CAD. So if you go into FX Standard, and then GBP CAD, and then show, and then close. What I want to do, I want to click on GBP CAD and pull it and drop it on this chart. Excellent. So can you see we've got GBP CAD there, yeah? Now also what I wanted to do, I wanted to find for me USD JAPY. I wanted to find USD JAPY. You already got it there. Close that for me. You've already got it there. So you're going to right click on USD JAPY and then chart window. Okay, and then we're going to click on the X there to close the market watch. Now what I want you to do now for me, I want you to go back to your view, and then I want the navigation. And no, I need the what I need. No. I need go to toolbar, and then I want to say chart. Okay, and then I want you to click on this bit, is what we call yeah, you're gonna click on that bit for me, so we can see both of our charts, right? Okay, so this is just sort of arrange a window. Now I want you to put both of them on the daily. So you're gonna, yeah, and I want the other one on the daily. Okay, and then what I want you to do, I want you to put your template on each of these charts. Okay, and what else I want you to do as well, you're gonna do the same for the next one. And then what I want you to do as well, I would like you to go to this bit. This bit is what we call the Alt Shift to the end. So click on the Shift to the end for me, because sometimes what will happen, and do it to the other chart for me, please. Excellent, well done. So basically what we've got here now, can you see what I'm talking about, right? Now what I needed to do now, Petra, I want you to go back to my FX book. So go back to my FX book now. No. Come off this, and no, don't close this though. No, we don't want an horizontal line. We're gonna go to my FX book, which is the website that we were looking at for the correlation. Okay, and then what I needed to do now, we're gonna click on that and more, and we're gonna delete all of those, and we're only gonna be interested in the USD, so USD JAPY and GBP CAD. So uncheck all of those. So just click on them. Yeah, that's it. And then do the others. Okay, and then the ones that I wanted to highlight from is USD, JAPI, and GBP CAD. So find USD, JAPI for me. Can you find it? It is, right? Let me tell you where it is now. It's yeah, no, USD, JAPI, and GBP CAD. So USD, JAPI. It's just by it's second column, right? Third from bottom. And the same, and then you also want to find the GBP CAD for me as well. So it tends to be by the GBP section here. So it's the 1, 2, 3, 4, 5, 6, 7, 8, the 8 column. 1, 2, 3, 4, the 5th one from top. Yeah, that's it. And we do the same below. It's going to be in the exact location. And then click on more. Okay, guys. Right. Okay. Right. So on the weekly, the correlation is very weak, but let's see what it is on the daily. Can we say on the weekly there's not much correlation, but because we're trading on the daily chart, then basically this is a very high correlation, so you've got to be mindful. Okay, so I'm going to ask now, Mr. Spence, can you explain for me what's meant by this negative 83? Hello? Hello? Yep.
You hear me?
Yeah, I can hear you.
Can you hear me?
Yeah, I can hear you. I can hear you.
Obviously, 100 means there is a correlation. I'm not quite sure, to be honest, what the
Okay.
minus 83 is.
Okay,
Does that mean there's no correlation?
No, but
One
look,
goes up,
see, I said this
Sure.
here, this GBP CAD is with this GBP CAD, so it's just going to be, because they're the same, it's going to be 100%, yeah? So what we're looking at is this GBP with this USD, it's
No correlation.
it's negative 83%, yeah?
Yeah.
So that negative 83%, it means it's a negative correlation,
Yeah.
and because it's a negative, as one is going up,
Yeah.
what's going to happen to the other?
They're going down.
It's going to go down. Okay, so, and then if it was a positive number, because look at this, you see this, there's a little sign at the side there, that's a negative. That just means negative, meaning as one is going up, the other one is going down. Now, Petra, what I want you to do now for me, I want you to go back to your chart, the MT4 platform. Okay, can we exactly see what's happening? So who's going up here now? Anthony, can you tell me now who's going up now?
GDP CAD is going up while USD JAPI is going down.
Okay, brilliant, excellent. So can we see then, guys, that if I was to say sell this currency pair, right, and buy this one, okay, this one will be going up. Or say we say it right. For now, let me tell you, no, we're not at that point just yet. What I want us to do is to make sure that we're aware of the fact that we have got correlation between the different markets. Okay, so where this market is concerned, right, we have got a situation where as this market is going up, this market is going down. So I could put the trade on and the trades actually cancel each other, because I'm betting that this one is going to go up, but I'm also betting that this one is going to go down. So if this one then goes against me and this one goes against me, so in effect I've actually taken the same trade. So what we've got to do is to be mindful. So as well as the positive correlation, we've also got to think about the negative correlation. But that's the reason why I've said the markets that we are going to select, I will say have a maximum of 2, whether it's been negative correlated, meaning it has a negative number, and it's over 70%. So I said a maximum of only 2 over 70%. Okay? And say, for example, if we were to look at another 2 now, so this is when they're negatively correlated. Can you see clearly that one is going up? Clearly that one is going down, okay? So Petra, what we're going to do now, we're based on our findings earlier, we're going to go and we're going to select 2 other markets, but markets this time that are correlated, okay? So what I want you to do is to go back to Market Watch. Market Watch is not there at the moment, so you're going to have to go back to your and put your Market Watch. Yeah, that's it. And then this time we're going to get GBP and we're going to get Euro USD. So you're going to drag and pull it over on GBP CAD. Drag and drop it. Yeah, excellent. And then we're going to do the same to Euro US on the second chart and the USD JPY chart. Okay, and then we're just going to close the Market Watch now. Right, now this one here, it's slightly different in terms of the sort of not that correlated. So what we're going to do, we're going to go with New Zealand USD. So you know where you've got the Euro USD, we're going to go with, yeah, we're going to go with we're going to take out Euro USD and we're going to put in New Zealand USD. So you're going to right click on the chart and we're going to find New Zealand USD. So go to symbols. New Zealand USD, yeah, New Zealand. There it is there. Okay. So if we New Zealand USD, if you scroll on a bit further there, New Zealand, just is where is the New Zealand there? Where's the New Zealand JPY? Scroll just below that one and then you'll find, because I tend to group them together, yeah. So there it is now. After New Zealand JPY, yeah, that's it. And then click on show. Okay, close. And where we've got New Zealand USD, where we've got Euro USD, we're going to drop New Zealand USD there. So pull and drop it on there, yeah. Okay, let's close Market Watch now and see what. Okay, right. Okay, let's see what they are like. So both of them are going up actually. Both of them are going up, and this is a really nice trade to look at, to be honest. Right. So anyway, it's a really good trade for me to think about. But anyway, what we're gonna do, we're gonna go to we're gonna go back to my FX book, and we're gonna look at GBP, USD, and New Zealand USD. Okay, so we're gonna go to and we're gonna get GBP USD and New Zealand USD. And just uncheck GBP CAD. And uncheck USD JPY. And we just need a GBP USD now, yeah? Was it those two? So we're gonna look at, yeah, and then click on right. So can we see why? Because it's only they're positively correlated, but they're not that strong. So what we could then do now, for me, go back to more, and this time we're going to look for Aussie USD. So click on Aussie USD for me, and then click on more. Now this time we've got 48%. Okay, so we can even trade those three together because none of them are over 70%, but they're positively correlated, but not that strong. Okay, what we're gonna go for now, we're gonna go for USD CAD. We got USD CAD and USD CAD, and also what I want you to do is to click on this one as well for me. That one and that one, okay? And then click on more now for me. Right, so what have we got there? Okay, so we've got another negative correlation. I've got negative there. I've got negative there. So I'm only seeing negative correlation. Right, let me click on some others because I just want to find one that is positively correlated. So let's go for Aussie Jappy. CAD, Aussie Jappy, CAD. I want something that's really, really strong so I can show you, you know, what these correlations are like, okay? Because what we don't want to have is too many of these things that are correlated with each other, because then it will be doubling up on trades, and we don't want to be doubling up on trades. Actually, in fact, what I could do is I could just click on all and then get 10 from here, and then that would give us a bit more that we can look at. Okay. Once I get to my 10, it's a maximum. The maximum I can have is 10, yeah? Right. Can we find some big I want a big, massive positive one. Okay, right. We've got the UK 100 and we've got the Aussie Swiss franc. Okay, those two are really positively correlated. We've got the Aussie Jappy and the CAD. Okay, right. We're gonna look then. We're gonna find then for this one now. We're gonna look at. So you probably wouldn't want to take those two. So we've got the Aussie Jappy, AUD Jappy, right? And we've got the CAD. See, that's 97%. Wow, that's really, it's almost like taking the same trade. So Aussie Jappy and CAD Jappy. Okay, guys. So what we're gonna do, because let me tell you, see, when I was an amateur trader and didn't know what I was doing, I would see a trade set up on Aussie Jappy, right, and see a trade set up on CAD Jappy, and because I get the setup, because I didn't know about correlation, I didn't know what it's about, I would take both trades and then and then the market then goes against me. So then I'm thinking, oh my God, how comes everything is just failing? Everything is failing. But then everything is going to fail because they're actually the same thing. They move the same way. They do the same thing. And that's what we're doing if we take if we take these two markets and buy them at the same time. Yeah. So what I now needed to do now for me, Petra, I needed to go back to your chart, to your MT4, and then this time we want Aussie Jappy on one and CAD Jappy on the other. No, I'm telling you, if I had someone to show me these things when I first started, I tell you, I'd be so good, you know. So I'm telling you guys, you know, the fact that you're doing these things now, you know, and we're also not going to be going all over the place, you know, looking at different markets and searching for trades, because we already have 7 markets that we're going to be practicing, that we're going to be focusing, that we're going to learn about, right? Just imagine, right? You've got all of your friends over the years, right? And then all of a sudden, you know, you've got a new friend come on the scene, and you decide to drop all your old friends, you know, and take on new friends, and you don't know anything about them, you don't know anything from Adams, but yet still you consider them as friends, you know. So what we want to do though is to make sure that the markets that we're going to be working with, right? Markets that we're going to be familiar with. We're going to learn how they move. We're going to learn how this just then what causes them to move. For example, for the commodity that you're taking, right? Which of the commodity that you want to be trading? Which of the indices? Which of the metal? Is it gold that you want to trade? Is it silver you want to trade? Is it the euro versus silver you want to trade? And you want to build that relationship. So once you see those market moving, and I teach you my simple trading strategy, because remember, once you've set up your 7 charts, then that's it. Trading is boring. And I don't know if you've seen me now, but I'm teaching. I'm doing this free course on binary option. I love binary option, and because of course I've got lots of other jobs to do, but with trading now it becomes boring because once I put my trade on, what else is there to do? I can't really, unless I'm going to probably try out a different strategy now. The different strategy I'm looking at now is binary option, and now I can actually move that forward. So that's what trading should be. Trading should be a boring thing. You put your trades on, you walk away. However, one of the thing I would say, if you're feeling really stressed, or you've got problems coming your way, and you've got markets open, make sure you put your stop loss on. And if you want to just come at the end of the day, look at your chart, follow which I'm going to teach you about rituals and all those sort of things. And then you set up your chart and you get up and walk away. Don't do anything. Don't go and sit there and look at your chart. Don't go there and sit there and look at the money that's going into your account or coming out of your account, because it will cause you to do stuff that you don't want to do. Okay? But anyway, if we come back to this point here now, where look at this, you can clearly see this is in a downtrend. Clearly see this is in a downtrend. Clearly see this is moved up here. Right, okay. This is another nice sorry, another nice trade here. Looking really, really good. Something that I'll probably look at. But I won't, because it's not a part of my trading plan. It's not a part of the markets that I trade. So I've got to make sure that I know exactly what I'm doing, and I don't just go and take trades for taking trades' sake. It's got to be the markets that I am actually studying. It's got to be the market that I know about. Okay, so guys, can you see these two? They're going down. They're positively correlated, meaning as one is going down, the other market is going down. Okay, so if we go back, if we go back to the my FX book, and then we're just gonna uncheck everything. So go back to, and we're gonna uncheck all the stuff below, and we're gonna just look at Aussie Jappy and the CAD Jappy. Okay, so just uncheck the others. And then highlight CAD Jappy, Aussie Jappy, and then click more. Now, right, guys, what I'm saying here now, I don't want to see anyone with markets, okay, that you're gonna have at least a maximum of 2. Whether it be, and I'm talking about whether it be negative or positive, it can't be over, right? It can't be over 80%, okay? Can't be over, actually 70%, you've got a better chance. But remember, these things do fluctuate, okay? So I would say you don't want any, or 2 maximum over 70%. Everything else must be less than 60%, okay? So 2 maximum over 80%. Whether it be positive or negative, should be less than 60%, okay? And that's what we're going to go for. Now, what you're going to do, you're going to be, and all of these things that I'm asking for homework, we could make a note of them. Okay, what you're going to do though, you're going to copy and paste. So for example, so you've got your two, what we call it now, your minors, means that the major currency pairs, right? Okay, and then we've got our two, and we've got 2 major. So my major here is like my USD. Most of the USD crosses are the major currency pairs. Okay, so this is my say this is my, So I've got my two major, 1, 2. So I've got my two major there. Okay. I've got my two minor. I've got my commodity. Okay. I've got my metal. I love this one. I love this one. I love this one. No, I love silver, yes, but I quite love gold euro as well. Okay, I love silver euro. Actually, I prefer silver euro. Okay, so my silver euro. So that's 1, 2, 3. So 1, 2, 3, 4, 5, 6, and then my indices. I can't leave out my FTSE 100. That's UK for life. Okay, so that's my 7. But guess what? Even though it's the indices and it's UK 100, you might start trading it and feel as if, what, some friends you've got, you just have to drop them because they're bad influence on you. So, and no matter what you do, you always lose. You've got to just drop that one. And you might then decide that you're going to trade the American S&P 500 or the German 100, or, you're going to one from the Japanese market indices, or you could do the Chinese indices, so that's what I've got there. Now I've got 1, 2, 3, 4, but you make sure you realize that they are sort of the same. So let's see, so if you look across here, right, that's 1, 2, 3, right? These 3 are the same as the UK 100. So you probably need to get rid of the Aussie Jappy, or you could get rid of the CAD, because the CAD has 1, 2, 3. So you probably just need to get rid of. So then go back to CAD Jappy. Okay. And then you could probably choose something else. CAD Chaff. And we go to more. The CAD Chaff. It's even 1, 2, 3. We've got lots there. But then what we're going to do, we're going to play around with it, and then you're then going to take a print screen of this, and you're going to email me that as your homework. And these are the markets that you're going to trade. Okay? But as I said, the maximum you're going to have over 80% is 2. So you've got to play around with these 7 markets. If you can't find 7, then go to 6. Okay? But I can guarantee you'll find markets there that aren't correlated positively or negatively. And remember, if you notice, we haven't got any negative 80s in this thing, so you might just have to take out, the euro here. You might have to take, because look at this one here. This one probably be okay. The only one that's over 70 here is the UK 100. So that's what you're going to do there. So you're going to play around with it until you can select 6 or 7 best friends. Okay? Eventually, what I'm going to be asking you to do is to draw the supply and demand for these. But what I want you to do is, first and foremost, is to get your head around the correlation. For you to go onto your charts. Okay? Go to your charts for me, please, Petra. And then you'll be able to look at a chart, 2 charts, and realize, and look, actually, they're the same thing. Yeah? That's what I would love you to be able to do. And say, look, it's pointless me trading these 2 markets. But let me tell you, this guy who charged me big money to look at my trades, because, no matter, we're improving, in order for us to get better, sometimes we've got to pay people for them to look at what we're doing and then analyze what we're doing. And he said the most successful traders, they only trade 2 markets. He said, of all the years he has been coaching, and for himself, he only trades 2 markets. He only trades the GBP, Jappy, and the Euro USD. Those are the only 2 markets he trades, nothing else. And he's making at least $5,000 a month. But those guys, they've got big account size. I'm talking million. $1 million account, so million pound account. So it's not a little account I'm talking here, and it doesn't have to be desperate for trades, you know. But also, as I said, guys, as well, I've found this link the other day where once you start trading live, then I'll then introduce you to that link where if your trades are outstanding, then what will happen, and you can get over 75% in terms of your percentage rate, then they will give you between 10 and £100,000 to trade for other people. Now I'm currently working on that, because I had to analyze my trade and realizing that I was getting a lot of good trades, but I was taking too many trades, and it's not very good, because when you take too many trades as well, it almost seems as if it's what we call this thing called martingale, because you're just in and out of trades. But we'll talk more about martingale, but you don't really need to learn about that sort of keyword there. Okay. Now, before we go, I'm hoping everybody understand their homework. We're gonna go to my FX book. We're gonna look at 6 or 7 different markets. We're gonna take 2 majors, 2 minors, 1 commodity, 1 metal, 1 indices, and we're gonna make sure that none of a maximum of 2 of them over 80%. The others should be as low like this lot. So we've got the 6, we've got the 34, 6 point something, 5.3, 43. That's what the others should be. Okay, for example, it would be nice if you could take, say, these two going together, UK 100, even though the Euro GBP, the GBP is with, and the UK is the same. So, but then they've got a negative correlation, but it's very weak. This one, for example, I could see a trade set up on the Euro GBP and the UK 100, and I take it no pain, because what? They're not that correlated. But if this was, say, 80, then I would have to mind what I do, because I might be doubling up, or because if they're negatively correlated, one trade might cancel the other. So as one is going up, the other one is going down. Yeah. And then both of them going in opposite direction, and my trade going in opposite direction. So they end up being the same trade, or one canceling the other. I'm winning on one but losing on the other, because I'm betting one is going down, but the other one is I'm betting one is going down and the other is going down, and end up one trade going against me, the other one's going for me, so they end up canceling each other. Okay. So yes, guys, can you any more questions, because I've got another session in 10 minutes, so but we've got 5 more minutes to go. Any questions before I go? Okay, I'll just go down the line, like when I'm in my department meeting and I'm going around, I just sort of go right around. Ahmed, any questions?
No, I wrote everything down, so no.
Okay, Anthony, any questions?
With the link to send the homework, I tried sending my homework through the link again last week, and it didn't work. I have to send it through email. I'm not quite sure what I'm doing wrong there.
When you say a link, what do you mean?
Okay,
Petra, go back to your chart for me, please. Okay, now go to File, and then go to Save As. No, go cancel that. No, cancel. Go to Save File, then go to Save As Picture. Save As Picture. Yeah, that's it. And then basically you want the active chart. Click on active chart, and then click on OK. Okay, so and don't say anything of it now. So on this one, on Petra's it doesn't work on the Mac. Okay, so we're gonna have to do this differently. So go to File, and then Save Picture As, and then go to active workspace. Actually, post image on. Yeah. Yes. Click OK. Can you uncheck for me? Uncheck image online. Because I think your computer probably Apple is probably blocking it. Click OK for me. Let me see what happens. Okay. Now go to File. Save as. And then go into Document. Go to Document. And this save. Okay. Go back to that document and see if you could retrieve it now for me. Is that there? As you drop it there, click on that file there. Okay, yeah. What it seems like for this Apple computer, I think Apple blocks a lot of things. Because if Anthony, is your computer Apple?
No.
Okay, so if it's not Apple, I'm gonna go back to my screen now. So if your computer is not Apple, this is what should happen. Okay, so I'm gonna go back to my screen now. So basically, if so all you've got to do then is to do this for me. You go to File. So for those people, however, all you're gonna have to do is you're gonna have to. I'll try and show you as quickly as I can. Okay. If you're an Apple computer, I think probably what you're gonna do if you but this week you're not really showing me the supply and demand zones of such, but that's what I'm gonna be asking you in probably next week. See if you've got time, you could do it start. But anyway, this is what we're gonna do. We're gonna basically go to File, going to Save as incoming mail. Okay. Then you're gonna get this. Then once you click on OK, right? Then it automatically send through. It automatically then sends through a link with this thing. And then all you've got to do is in computer's a bit slow. Okay, so it's automatically send a link, and then this link now I just copy the link from the web address here. Okay.
Yeah.
So it's going to show me the chart shortly. Then I'm going to Control-C, and I've just put it into the chart. So just as though I've just put it into the chat for you, I'll put it in the chat. If you click on that link in the chat, then basically you'll see my chart. Okay, so if you click on the link that I've sent to the chat, you'll see the chart, this chart that I've just got here. So all you've got to do is just to send me through. Now, for the next week's homework anyway, what you're going to do now, say you've got a Word document, right? So you could go on. So let's go back to Petra's. Okay. So Petra, if you could go back for me to the okay. What we're going to do, Petra, I want you to go to close that for me and then go back to my FX book. Can you press for me control print screen on your computer? No, we're gonna print screen it. No, country. No, we're gonna print screen that, and then we're gonna copy it and paste it into a Word document. So click on cancel there for me. So no, what I want you to do, I want you to print screen that so we can actually have it. Okay, I could actually do it actually. So can you open a Word document for me? Can you, Petra, can you open a Word document for me, please? Okay, this is a Word document, yeah? So I'm going to do now, I'm going to, okay, where is it? Okay, so basically, it's actually just, this is whatever you're looking at there, okay? So it will print screen the charts for you. So you just press, you press Control and print screen, and it will then print screen it for you, okay? So, and then that's what this is the bit that you're gonna send through to me as your homework, okay? But anyway, guys, enjoy the rest of the evening. Hopefully you find this homework really easy, and we'll get it done and you send it across to me by Sunday, and then I'll have a look. But as I said, maximum 7 markets, and also we're looking at making sure that maximum 2 of them over 80%. Everything else should be way less than 70. Okay, and have fun doing that. And also, what I needed to do as well, I needed to, for your commodity, for the majors, I wanted to research about those economy. Just write something about it. We're not fundamental traders, but I want you, for example, to have some information, some knowledge. Because remember, you've got friends. If I ask you about your best friends, you can tell me stuff about your best friends. Okay, you're going to tell me personalized. You will be able to tell me personalized information that probably nobody else know. So this is what I want you to do to these markets. I want you to go away. I want you to look at these markets. And for example, if you decide that copper is the commodity you're going to be looking at, then go away and learn. Find out what affects copper as a commodity, what affects crude oil as a commodity. The OPEC guys, crude oil, these rich oligarchs, oil oligarchs from the Middle East, all of those countries, these guys, OPEC said they're going to meet, that's going to affect the prices. However, we are not fundamental traders. We're technical analysis. We use technical analysis to trade. So as a result, right? But still, we need to have an idea about this. So also I wanted to add what effect, once you've got the markets that you're going to be trading, the next thing I want you to do for me is to write a bit about them. Because now you're making them your friends and you're going to find out a bit about them. And, what affects, if you're going to say, for example, you're going to look at the Euro USD, what affects that one? Okay, guys. So anyway, everyone, have a really good evening. And it was a pleasure teaching you today. And I look forward to our next session next week and look forward to marking your homework over the weekend. God bless and speak soon.
God bless. You too.
Okay.
Bye. Bye.
Bye.
Yeah. Bye-bye.
Thank you.
You're welcome. Bye-bye.